Hello, everyone. There we go. There we go. Sorry, I had to adjust a little bit. Had to move my camera yesterday for the Ninja Trader webinar. So I had to adjust it back. It was a little off. How is everyone doing? Happy PCE Friday. Hope everyone is doing fantastic. In case I forget, everyone have a wonderful weekend coming up. I don't know if you're going to watch the Olympics. I mean, there was interesting moments. If you saw some of the torch yesterday, well, we don't need to comment on that. Actually, I think I already did just comment on that. But more important, we have the PCE numbers again. John, good morning. I gotta say, find Sterling's good morning. He put in all the information so far. Good morning, Sterling. Good morning, Mark. Thank you for tuning in. Haven't seen you in a while. Good morning, AS. Good morning, Heinrich. Good morning, Jacob. Good morning, Charles. Let's scroll back up. We had there's the PCE numbers coming in. Real personal. Oh, that's personal consumption. There we go. Let's just go through them over here. Let's go through them over here. It's easier for me. Yeah, the core PCE consensus was 0.1 coming in at 0.2. Also, last month's PCE was revised higher. This is exactly what I'm worried about. Now it's going to be interesting with Powell next week in the press conference. If he's telegraphing the September move, or if this just is not good enough yet to really say they're ready. I think it's what I'm worried about. Stalling out up here, without getting into a pretty major recession. So, personal income. Personal income was down a bit. Personal spending was in line. So income down, spending still chugging along. But that means people are going into more debt. PCE index month over month coming in at 0.1. Core PCE coming in year over year, coming in at 2.6 versus 2.5. So things are slightly hotter. Not drastically, but you know what? At the upper end of expectations. At the upper end of expectations. So, is inflation dropping? Yes, slowly, but it's starting to get more signs with the PPI and even the PCE that it's stalling out up here. So that's my concern. And then what do you start cutting into that, and what could happen? Now, if we fall off a cliff, recession wise, you'll start to see it come down. Who else is here? Who else? Where did I leave off? Good morning, Royal Palms. Don't forget to hit the like. Yeah. What was that? 87 and a half rule on the NQ retrace was a path trading partner chef kiss on your muddy trading day. Again, these harmonics do work. Again, nothing's 100%, but if you line up and stick with probabilities, they work more often than they don't. So we still have consumer sentiment coming out at 10 a.m. Eastern, so just over 50 minutes away. And the inflation expectations, to see if the inflation expectations are still sticky. That's what we keep an eye on. And then that pretty much wraps it up besides rig counts. Monday, there isn't much going on. In terms of the heat map, Bristol Myers Squibb up over 6% today on their earnings, which was a beat. Sterling also put in MMN in here. I saw that. There you go. Which was a beat. So those were the couple. You have a decent bounce in the chips this morning, sort of mixed in the mega caps. But remember, we've had a couple pretty significant days of selling, so not surprised. Is there a bigger bottoming pattern? We will take a look. A potential bigger bottoming pattern. In terms of our sectors, technology, consumer, cyclical. So it's definitely sort of buy everything for a bounce so far this morning. We have to see if that can sustain into the open. After two, yesterday we tried to bounce and could not sustain it. So that's what I'm keeping an eye on. But if we take out yesterday's lows, watch out. If we cannot sustain something, at least a bounce move, and take out yesterday's lows, watch out. Fed watch still pause for next week, and this dropped a little bit down below 90, but the market's still expecting a cut. Fear and greed still in fear. Show PE. Oh, look, the market's a bargain. It's back below 35. So that's where that stands. Again, we already covered Burst Squib and 3M. Those were the biggies this morning. Not much else going on, so we can close this out for the week. Next week is huge with earnings. Next week, huge earnings week and Fed week. So the next week is a non-vacation week. A non-vacation week. Let's take a look at the S&P. Again, tried to bounce yesterday, coming back down. This is technically valid. A potential double bottom. Now, I'd really watch the first and the second targets on this. If it were to trigger, we need at least a 1 hour close. A 1 hour close above 55.33.25. So anywhere up here, especially even around about 55.18, there is 55.19. There's significant resistance it has to get through to trigger. That potential double is still just a potential. And if we look at this, if we look at the retracement here, we haven't even, we're trading between the 30s, oops, sorry, that's what I thought I was off. There we go. We haven't closed above the 62.5 yet. So going into the open, that's what I'll be watching. Now, if we roll back down and retest yesterday afternoon's lows, the 1 hour double is off the table. All right, until that happens, going in the open, I'm watching for a close above about 54.96. And then the first key target for me would be 55.21, and then it would be watching for 55.33. If we drop back down, my first key level of support is 54.58 to 54.59. Breaking that, retest the lows. We break down below the lows. 54.11 is the next head and shoulders target. And then you have 53.65. We have not triggered the wedge yet. All right, you see here on the weekly, we're in the weekly rotation zone. I have not triggered the wedge or closed well. I mean, we're well above the weekly rotation zone. Now, we still have potentially 2 to 3 more weeks of down price action even after any bounces. So please keep that in mind. It's all potential. Could we hold here and bounce and circumvent that? Yes, but the probabilities say we should have, at least after a bounce, we should at least roll over and make a stronger base. Eric, what great talk on risk reward on Ninja Trader. Is that a double top on the DAX weekly? We'll take a look at that. Thank you for those Ninja Trader comments. On the NASDAQ, same thing. Same thing. Potential double, 19.3, 90.50. If you're watching for a little something off the open, you see here, stalling out right, that's 62.5. So 19.222 is what you want to follow through on the open with a close. Then my target would be 19.344, and then I'd watch that 19.390.50 for at least a 1 hour close. If it rolls back down, very key support around 19,040. Okay. If we break yesterday's lows, 18.8 roughly, 18.8, and then what do we have? Then what do we have? We have next key area I'd be watching is about 18.560. Where does this sit? This has tested the bottom of the rotation zone, so far bounced. So on a closing basis, it's right around, yesterday's lows. If we close at or below yesterday's lows, we've technically closed below the weekly rotation zone, and then it would be neutral on the weekly. But we are at the bottom of the weekly rotation zone. The Dow, bounce here. So far, a little bounce. This is not a double because you have this little double that triggered yesterday and this pulled back down. So you cannot treat this as a double. If you're looking for stuff, I would personally use the retracement harmonics. So right around this 40,640 would be a first target area, then 40,863, then 41,065. That's how I structure it. If we do break below the lows from Thursday, really watch out. This is where I'd use the forward harmonics like this. And then, so if we broke down below, I'd look at 39,850 and then this cluster area 39,568 to 39,648. Russell still holding up back at support level. So that's where we sit with that. Major resistance still back at 2290. Key support coming in at 2257. VIX trying to drop back down a little. Really, to sustain a rally, has to get back below 1650 to get anything more sustainable. The DAX, is this a double on the weekly? No, it is not. So there is your answer, Eric. This is a triple. Remember, a triple only very so slightly favors a continuation move, but you can't use this. What you should be watching for is if the DAX closes below the weekly rotation zone. All right? And then I'd be watching for a retest of the low area back from April. Other than that, it's in a bigger consolidation pattern. You can see that on the monthly and still holding them sideways on the overall correction and still holding the rotation zone. If you start getting a close below this 17.9, it's going to get much more interesting in the DAX, but that is not a double. Notes, still slightly pushing up. Again, next key prices based off the probabilities in the close above 62.5. Next key targets 111.25, 112.17.5. The yield, after hitting the first target area, still, if we close back below 4.195, the potential double is off the table now that PCE is out of the way. 10-2s, pulling back yesterday, but still holding, still trying to stair step higher. Nothing else to report on there. Dollar index, still the confirmed but not triggered double. Trying to rotate back down after kissing the channel goodbye, but sort of caught between some key support and resistance. So in my book, there's nothing to do yet. Crude, technically triggered a little mini double and not followed through. At this point, the invalidation point, because you always got to know where it's wrong, is a close back below 76.85 or a trade down through 76.58. So that's where that sits. Gold bounced today. However, yesterday closed below 62.5. So I'm now watching for more rollover plays to retest the key support area. And there's no strong bottoming pattern yet. This is just a little bounce. We have the rotation zone overhead and very key resistance back at 23.96 area. Also remember, silver triggered the double. So we could easily pull back in silver to the 200 moving average. Easily. So I'd be very patient at this point with metals. Any bounce in copper, I'd be looking still for the next rollover play. We don't have a strong bottom yet. The yen, trying to build a stronger base, but nothing yet. Technically, if we close above yesterday's high, it's a little percent B bounce play, but I don't know if you could get reward to risk. because the stop technically has to go below yesterday's low, and you're slamming in the rotation zone overhead, which is exactly what I was talking about with Ninja. Just because you might have a trade set up that triggers doesn't mean you necessarily have a trade. You still have to get your reward to risk correct. And if it's not, there is no trade. Remember, every setup does not equal a trade. We've seen it with doubles. Even doubles might not trade. They might just drop to target or fine. You might not be able to get in it. That's a trade. Doesn't matter if it went to target. If you fine, it worked technically, but if you couldn't get in it, there was no trade. Spiders. Spiders, just keep watching. Use the retracement harmonics. Use the retracement harmonics 544.38, major closer 547.80. Watch in case the double triggers on the futures. All right, the Qs. Again, I'm looking at this is supposed support is about 461.60, resistance 467.60, and then 473.60. Bitcoin, again, trying to rotate back up, little connection with the bottom of the weekly rotations or the daily rotation zone. It did close above the 62.5, remember? So the magnet price is still 69,665 area in the short term. Also, talked about this on Ninja. I couldn't show a chart, but I'm going to continue to watch for, this is going to be a play for potentially the next few months on any bounces in the QQQ IWM. So, and any bounces, especially in the NASDAQ, going to be watching for NASDAQ to break down more than the Russell. They can both go down, but we're going to watch for the NASDAQ to go down more than the Russell, which brings this ratio substantially back down. This ratio is way overdone. Don't touch on it very often, but you can look at this. Look at this shift on the monthly. So this means I'm going to be watching for bounce plays on the ratio to set up potential rollovers in a pair trade. Just point that out again. Tesla still stalling out at the first target. Any bounce, we'll be watching for rollovers in there. Nvidia hitting the first target area yesterday. So stop reduction. Okay. The invalidation point would now be a close above 127.84. Other than that, it's still looking to short rallies and complete moving down. Also, if you saw, Amazon's testing its own AI chips to try to reduce its dependence on NVIDIA. You're going to see more than that. Okay, other people are going to catch up with NVIDIA and their GPUs. Can we check out DXCM? Sure. Had earnings today. What was it? Miss on revenue. Never a good sign. Also, look, going into earnings. Wow. Holy smokes. That just absolutely got crushed. I was going to say, it already closed below key support. And look at this. I was going to bother doing the retracements, but holy smokes. Holy smokes. We got to go back farther. Wowzers. Wowzers. That's a technical analysis term. Wowzers. The good old wowzer technical analysis term. All right. Look at how this, I mean, this, look at this. Look at this. Roughly just go off 68. Look at how that lines up with the key lows back from May of 22. And we're trading right at that 62.5. So you start closing today below 68, taking out these lows and below the 62.5. Okay? And why did I choose this instead of going all the way here? Because this is a very strong base that it broke out of. But if you close below this, you could round trip it all the way eventually back to 30 bucks over the next few months. It just broke all the key support. Now, I'd really wait for this to close because you might get some bounces along the way, but this would not be without it forming a strong daily bottoming pattern. At least we'll be watching for rollover plays. This is not something I try to catch a bottom without, and what could be a bottoming pattern? Well, look at this. Look how it bottomed here back in May, June. Little double bottom pattern. Okay? So if it were to set up something like that again over the next bit, that could be tradable. But I wouldn't just run in and buy a dip on this. No, this is. So thank you for pointing that out. Because too many people say, oh, it's a bargain and I'm going to get the bounce on here. Yeah, you might get a bounce, but boy, when you see that kind of gap, I'd be looking for the rollover play unless you get a stronger bottoming. Yeah, I had to look twice too. I'm like, oh, hey, we broke down below support going into earnings, and then it was like, voop. But wow. Wow. Well, that PE ratio is going to come in a bit. That's going to come in. All right. Let's just take a look. Going into the open. Going into the open, reminder, I need to see follow through. Keep in mind, 30 minutes after the cash open, so 35 minutes from now, do not ignore consumer sentiment. But the key for me is that 54.96 level on a closing basis in the short term. Other than that, going into the open, about 54.70 is the first level of support should we trade lower. All right, everyone, have a wonderful, wonderful trading day and a wonderful weekend. And I will talk to everyone next week. Bye for now.